Welcome back. OpenAI is becoming the latest company to file to go public. But our next guest is sounding a warning on IPO euphoria. He says SpaceX valuation is floating out near Pluto, arguing investors are being asked to pay nearly 100 times sales for a seat on that particular rocket ship. So joining us now for more is IPO analyst Brian Hamilton, chairman and founder of LiveSwitch. And still with us for the conversation is David Katz, Chief Investment Officer over at Matrix Asset Advisors. Thank you, gentlemen, both. Brian, we're going to start with you on this one here. Let's talk a little bit about the concerns that there are for SpaceX. Yes, there are some, but they are being drowned out, heavily so, by a lot of the bullishness around the narrative of a space travel company and, of course, ties to Elon Musk. So take us through what the narrative is in your mind.
Okay, Dominic, if we started a company, right, and we grow the company, I've been an entrepreneur my whole life. You grow the company, you want to go public. In general, IPOs are valued about 10 times trailing sales. SpaceX is 93 times. So basically, there's a 2,000% increase in the what I call the Elon Musk premium. So investors who are coming in, interesting guy. Frankly, I don't know why he's going to Mars. He should go to like Wyoming. I don't know if you guys have ever gone out there, but it's lots of land, you know what I mean? But on a serious note, really, the valuation is just sky high. So if people are coming in, interesting dude, great things, not a bad company necessarily, although they're all over the board with regard to their mission, but super overvalued. It's very simple.
David, have you looked through, I know it's not true.
We have looked through SpaceX because we were getting a lot of clients that are calling about it and asking about it, and we agree with that assessment of the valuation. It's at a 90 times sales, very excessive. You're betting on Elon Musk, but you're paying a lot for it. We think short term probably goes up, but longer term it's going to settle down. If you like the company, we'd buy it after it settles down. It's not an IPO that's coming out fresh. This is a company that's seasoned at a really rich price.
Although I will say Starlink seems like a great business.
That's a great business. The other businesses are the ones that are investing a lot of money in that are costing them earnings and EBITDA. So when you put it all together, it's losing money.
It's funny because it almost is a conglomerate. It's an Elon Musk conglomerate in some ways. And as we were told the other day, the only reason you should ever have a conglomerate is if it's going to outperform the S&P 500. And in his case, maybe the investors could say, well, at some point, you can spin out a number. There are going to be businesses coming in. There could be businesses spun out, and maybe that's one way to do better in the future. I don't know if Starlink got. I get the valuation is so high at the beginning. It's going to take a while to grow into.
Absolutely, and there's also rumors that you might put Tesla in to the package, so there's going to be more consolidating than spinning out for a while.
Brian, it's an interesting point because we're talking about SpaceX, and you rattled off the metrics to go along with it. But this is the first in a series of 3 high-profile ones that could be in that $1 trillion range when they come to market, in Anthropic and then with OpenAI. Just how exactly do IPO investors treat a 3-headed monster like this coming to market, storied franchises, even though we still call them startups? But this is going to be a plethora of options for investors to go through. How do you raise money for it? And then how exactly do you allocate between them? And then do you buy the IPO or do you wait?
Yeah. Well, let's go back to number one, SpaceX. I mean, the value is incredibly high. But here's my beef, guys. I've been an entrepreneur my whole life. When I go start a company, I got my money in it. And to his credit, he's done that, right? But think about it. There's about 10 companies in the world that have $1 trillion valuations. Only 10. When these guys go out, they're going to be at about $1.6 trillion. They're going to be in that top 10, and they're an IPO. So all of their risk as founders is really coming off the table. So that's my issue. With regard to the other ones, their valuations are a little bit high as well, but they also have very high growth. It's very difficult to pinpoint value for those other two, in my opinion.
Some thoughts on that.
Go ahead, David.
It's interesting when you look at OpenAI and Claude, they don't have as big a moat as you think. 6 months ago, OpenAI dominated. ChatGPT was great. People are moving over to Claude if you're a business, and it's very easy to switch back. And the one that we've mentioned earlier is Microsoft. In Copilot, they offer Claude and they offer ChatGPT. Right now, Microsoft offering, from our perspective, is a little bit inferior, but we think when they catch up, they're going to get a lot of credit. Microsoft sells for $3 trillion, has the cloud, has Microsoft 360, Excel, and you're not paying for all that. And these others are selling for $1 trillion, And Microsoft has a very good long-term AI offering.
Yeah, and we haven't seen the full financial details yet of SpaceX. I'm sorry, of OpenAI and Anthropic, but it sounds like you're coming from a position of skepticism as it regards those as well. When I'm sure clients are going to start to call you about those too.
We are. We just think you get much bigger bang for the buck with Microsoft. We use Claude all the time, but when we're using it, it's public. So when we want to do private, when we want to do client stuff, we have to go back into Copilot. When Copilot is anywhere near as good as Claude, and they're offering Claude inside of it, it's a no-brainer. We're going to be switching back and only using Copilot.
Hey, by the way, David, one small point here, a fine point. Microsoft actually does the radical thing for tech companies. They make profit. They've done it for 35 years.
Yes.
Cranking out profit all the time. Profits going up. So these companies are startups, and they're asking for that. I don't know where they are, about $4 trillion in valuation. But these guys are going out with, hey, we've already made it. And dude, you haven't made it yet. You still have a 50% net profit and loss. So they haven't made it yet. So they're really, again, taking all their risk off the top.
It's also pretty funny. We forgot to mention that a little company called Alphabet and Google has Gemini as well in this whole process.
That's my go-to. Yeah. Gentlemen, thanks. Really appreciate it. Brian Hamilton and David Katz.